How do we record it in our books? Pass the entry bank account return to cash account. On which date? On the date of depositing the money. When will the bank pass the entry? On the same day. What is the entry? Bank will pass cash account return to customer account is entry. Bank passes. The bank will also pass the entry on the same day. There will not be any difference in balances. When cash is withdrawn from bank, when do we pass an entry? On the date of withdrawing the money, we pass the entry cash account return to bank account. When will the bank pass the entry? On the same day. Customer account return to cash account. On the same day, bank also pass the entry. Next, we discussed about check received from a customer. When we receive a check from a customer, what is the entry we pass? We assume that on the same day we have deposited the check in the bank, and on the same day bank has collected the money. What is the entry we pass in our books of accounts? Bank account debtor to debtor account. On which date? On the date of receiving the check itself we pass the entry. When will the bank pass the entry?
On the date of
Bank will pass the entry only on the day bank is able to collect money on the check. When the bank collects the money on the check, what is the entry bank will pass? Cash account return to customer account. Cash account return to customer account is the entry bank passes. Suppose bank is not able to collect the check, then bank will not record any entry in its books of account. But we, as soon as we receive the check, we record an entry in our books. But the bank will pass the entry only on the day when the check is collected by the bank. Is it clear? There is a difference. We will record the entry on the date of receiving the check, whereas bank will record the entry only on the day when it has collected the check. We deposit the check today. If the bank collects the money after 1 week, for these 7 days, balance as per our books and balance as per the books of the bank will not tally. So this difference has to be explained through a document called as the bank reconciliation statement. Is it clear? Then we also discussed checks issued to suppliers. When do we record entry when we issue a check to a supplier? On the date of issue of the check itself, we assume that we have issued a check to the supplier. Supplier has gone to the bank and he has immediately taken the payment on the same day. That is what we assume, and we record the entry on that date itself. What is the entry we pass in our books? Supplier account debtor to bank account, or creditor account debtor to bank account is entry we pass. Okay. When will the bank pass the entry? Only on the day when the creditor presents the check in the bank and bank makes the payment only on that day, bank is going to pass an entry. What is entry bank will pass? Customer account debtor to cash account. What is entry bank passes? Who will record the entry first? We will record the entry first. Bank will record the entry later. And till the date bank pass an entry, there will be a difference in balances which are explained through a bank reconciliation statement. Okay. Then we discuss some more transactions. Payments made by the bank as per standing instructions. We give a letter to the bank called a standing instruction to pay our telephone bill, insurance, rent whenever they become due. So as soon as the bill comes, bank will make the payment. So who will record the entry first? Bank. What is the entry bank will record? Customer account debtor to cash account is the entry bank passes. And after some time, when we go to the bank, when our accountant of the business goes to the bank, he'll come to know that some payments have been made. Or when we log into the net banking account and see that some transactions have happened, then we'll record an entry for that transaction in our books of accounts. What is the entry we will pass then? Expenses account debtor to bank account. Because bank is paying expense, our expense. Expense account or to bank account. Who passes the entry first? Bank. When will we pass the entry? Later. So there can be a gap. During this gap, there can be a difference in balances. Is it clear? Next, we also discussed about some direct collections made by the bank. Our money is getting directly deposited in the bank. Our customers deposit money in the bank directly. Or we have invested money in the shares of a company. The money directly, the dividend, the company declares some dividends. Dividend goes into the bank directly. We have purchased some bonds, debentures in other companies. Those companies are sending interest. They don't send interest to us, the interest will be deposited in the bank account. What is the entry? Who will read the entry first? Bank. What is the entry then pass? Cash account to customer account. Bank will pass the entry first. Then, when we come to know that bank has received the money, we pass an entry in our books. What is the entry we pass? Bank account debtor to income account is the entry we are going to pass. There can be a delay causing temporary differences in balances which are explained through a bank reconciliation statement. Is it clear? I think till here we have discussed yesterday. Continue now. Next transaction. Head down. Books of bank. Books of business, sorry. Books of business. Books of bank. Read the next transaction. Bank charges charged by bank or debited by bank. See, bank is giving us some facilities called as the overdraft facility, checkbook facility, online transactions facility. So, when you use the services of the bank, bank can charge some charges. What are they called as? Bank charges. Okay. Write down it first. Bank charges charged by the bank. Bank charges charged by the bank. Who will record the entry first?
Bank.
Bank charges are income for the bank. So bank is going to credit bank charges in its books. They are going to take money from whose account? Customer account. So what is the entry? Bank passes in its books first. Customer account debtor to bank charges. Customer account debtor to bank charges. What is the logic of the entry? Bank charges are income for the bank. They have to be taken from whom? Customer. So they are going to deduct the amount from the bank balance. Is it clear? See, when you deposit money, bank gives us a credit. Now what is the bank doing? Debit. That means they are renting money from our account and they are recognizing it as a income for themselves. Bank charges. Is it clear?
Yes.
So you write here note. Bank charges is income, hence credited. We are deducting it from customer. See, when customer deposits cash, customer account is credited in the books of the bank. But now what are we doing? Crediting customer, debiting customer. So we are withdrawing money from his account. Who is withdrawing? Bank is withdrawing. Note. What will you write here? Bank will pass the entry first. Bank will pass the entry first and inform the customer later. Bank will pass the entry first and inform the customer later. So what is the entry in the books of the business? Now when we go to the bank, we come to know that bank has withdrawn some money from our account on account of bank charges. So our charges we have to now pay to the bank. So what is the entry will pass now? Bank charges account debtor to bank account. Bank charges account debtor to bank account. See, when you debit bank, when you deposit money, bank is debited. Now when you are crediting bank, that means money is being withdrawn. Bank charges account debtor to bank account. You are paying money from your account, no? But who is taking the money? Bank itself is taking the money. But we are paying the money out of our bank account. So what is the logic? Bank charges account debtor to bank. Bank charges are our expense. Payment by the bank. Hence bank account should be credited. Who is receiving the money? Bank itself. Okay. So the entry in the books of the business is bank charges account debtor to bank account. Note. What do you write here? We will pass the entry only on the date of receiving the information from the bank. we will pass the entry only on the date of receiving the information from the bank. Causing temporary differences in balances. Causing temporary differences in balances. These temporary differences are explained through a document called as the bank reconciliation statement. Okay, next. Interest charged by the bank. Interest charged by the bank. Or debited by the bank. Interest charged by the bank or debited by the bank. Interest charged by the bank or debited by the bank. Now suppose you have taken a loan from the bank and the bank says every month 10th you have to pay interest. You have taken a loan from the bank, bank says you charge every month 10th you will charge interest. So will the bank make a phone call to you on 10th and will they ask you, sir, we are debiting interest in your account, we are going to charge you interest now. Will they call you again and again tell you? As soon as the date comes, bank will charge interest. Or if you have taken an overdraft, overdraft means you have drawn more than what is there in your account. So when the account is in overdraft, they will calculate interest daily and every month they will pass an entry. So without informing the customer, bank will charge an entry for, they will charge interest. So now interest will become income for the bank. So interest, nominal account, incomes and gains should be credited. Whose account should be debited? Customer account. Customer account should be debited. Because money has to be taken from whom? Customer. So entry in the books of the bank is customer account debtor to interest account. Okay. You write note. What will you write there? Bank will pass the entry first and inform the customer later. Bank will pass the entry first and inform the customer later. Bank will pass the entry first and inform the customer later. Okay. What is the entry in the books of the business? What is the entry in the books of the business? Our expense. We have to pay to bank, no? So what is entry right? Interest account debtor to bank account. Interest account debtor to bank account. Note. What will you write in note now? We will pass the entry only after receiving information from the bank. We will pass the entry only after receiving information from the bank. There may be a delay causing temporary differences in balances. It may cause a delay. There may be a delay causing temporary differences in balances. Is it clear, everyone? One more transaction, last transaction. Interest allowed by bank. or interest credited by bank. Interest allowed by bank or credited by bank. What is my interest allowed by bank or interest credited by bank? What is happening now? Bank we have made a fixed deposit in a bank. We have made deposits of money in the bank. Bank is now allowing interest to the customer. They are not charging interest. They are giving interest to the customer. Will they call customer, put a bottu to him and put cash in his hand and say take interest? No. They will not give interest in cash. They will say we will credit the interest in your account. Whenever you want, you can withdraw cash and take it. You will only pass an entry. Who will write the entry first? Bank will pass the entry first. Now interest becomes expense for the bank because it is paying interest to the customer. So right here, interest account debtor. It is expense for the bank. To whom it has to pay? Customer. Customer account should be credited. What do you write below that? You write note. Note. Bank will pass the entry first and inform the customer later. Bank will pass the entry first and then inform the customer later. Write down entry in the books of the business. Entry in the books of the business. What is entry in the books of the business? Interest is my income. Interest is my income. Hence credit in my books. Where is the money? In my bank account. Money has been deposited in my bank account. Interest is my income. My interest income is deposited in my bank account. What is entry I'll write? Bank account debtor to interest account. Bank account debtor to interest account. When will we pass this entry in our books of accounts? On the date of receiving the information, we will pass the entry. There can be a delay causing temporary differences in balances. You write. We will pass the entry on the date of receiving the information from the bank. There can be a delay causing temporary differences in balances. First of all, you have to master all these transactions. Only then you can come to solving problems on bank reconciliation statement. If you know who will record the entry first, how the entry is recorded, timing of recording the entry. If you know all these things properly, then preparation of a bank reconciliation statement is very, very simple. Continue. Write down. Favorable bank balance means write down. Favorable bank balance means, continue. Transaction number 10. Favorable bank balance means Write down favorable bank balance means. Why are you late? Why are you late? Favorable bank balance means, tell me what is the favorable bank balance? What is my favorable bank balance? You already learned it in triple column cash book. What is my favorable bank balance? Debit balance in the cash book. Credit balance in the passbook. That is called as favorable bank balance. Write down. You will prepare it like this. Cash book. Bank column. To balance brought down. Deposits are more than withdrawals. Deposits are more than withdrawals. Then we say we have favorable balance. Okay. Books of the bank. Customer account. This is also called as passbook. Right? By balance brought down. So what do you mean by favorable bank balance? Debit balance in the cash book and credit balance in the passbook. Debit balance in the cash book is called as favorable balance. Credit balance in the passbook is also called as favorable balance. Favorable balance means our money is there in the bank. Deposits are more than withdrawal. In our books, debit side is deposit side, credit side is withdrawal side. In the bank books, credit side is deposit side, debit side is withdrawal side. Is it clear? Next. After this you will write 2 points. Right here. Favorable balance increases with deposits. Favorable balance decreases with withdrawals. Do you agree with these statements?
Yes, sir.
What am I saying? Favorable balance will increase with deposits. If I withdraw money, favorable balance is going to reduce. Am I correct? Yes. Favorable balance means already money is there in my account. If I deposit some more money, balance is going to increase further. I have favorable balance. If I withdraw money, balance will automatically reduce. Yes. So favorable balance will increase with deposits and it will decrease with the withdrawals. So if you want to increase favorable balance, what should you do? Deposit. If you want to reduce favorable balance, what should you do? Withdraw. Is it clear? Next you will write. Overdraft. Bank balance means tell me, overdraft bank balance means what?
Credit balance of cash.
Withdrawal is more than the deposit. Withdrawal is more than the deposit. Bank account. What is my bank account here? Cash book. Deposit, withdrawal. Which side is more now? Withdrawal. By balance brought down. Overdraft bank balance means withdrawal side is more than the deposit side. Customer account. Passbook. Which side will you write down? This is deposit side, this is withdrawal side. Withdrawal side is more than deposit side. The total of this column will be more than the total of this column. Balance will appear in this column. To balance brought down. balance brought down. To balance brought down. So, what do you mean by overdraft balance? Overdraft balance means credit balance in the cash book, debit balance in the passbook. Can I again repeat? What do you mean by favorable balance? Debit balance in cash book, credit balance in passbook. That is called as favorable balance. Overdraft balance means credit balance in the cash book, debit balance in the passbook. So what is overdraft bank balance? Credit balance in cash book, debit balance in passbook. I'll again confuse you and try to find out whether you have understood or not. Credit balance in passbook means what?
Overdraft.
Credit balance in passbook means what? Credit balance in passbook means favorable. Debit balance in passbook means overdraft. Okay, I should not go like that. I think I'll go in some other order. Debit balance in cash book, favorable. Credit balance in cash book, cash book, overdraft. Again, debit balance in cash book, credit balance in cash book, debit balance in passbook, overdraft. Credit balance in passbook, again, debit balance in cash book, credit balance in cash book, debit balance in cash book, credit balance in passbook. What is it called as? Favorable. Debit balance in, so not debit balance, credit balance in cash book, debit balance in passbook. What is it? Overdraft. One more time. Credit balance in passbook is what? Favorable. Debit balance in passbook is what? Debit balance in passbook. Debit balance in passbook is a no, still no time. Debit balance in cash book, credit balance in passbook. What's it called as? Overdraft bank balance means credit balance in cash book, debit balance in passbook. Okay. Now tell me, debit balance in passbook means what? Credit balance in passbook means what? You are looking at the board and telling. Very bad. Now below this you write first of all 2 rules. Write down. What will you write? Overdraft balance will increase with withdrawals. Overdraft balance will decrease with deposits. Overdraft balance means negative balance. Again, if you draw, what will happen? Draw means withdraw. Already negative. Again you withdraw. Negative will increase. Minus and minus is a plus. So you already have minus balance. Again you do minus. The minus will increase. Correct? So what is what we said? Overdraft bank balance will increase with the withdrawals. Overdraft balance will increase with withdrawals. Similarly, overdraft balance will decrease with the deposits, because overdraft balance means negative balance. Depositive means positive. Negative and positive. Negative will reduce. Is it clear? So overdraft balance will increase with the withdrawals and decrease with. I am not saying my bank balance will increase. Don't think that the amount of money in my bank will increase or decrease. I am not talking about that. I am talking about the negative balance. Already there is negative balance. You again withdraw. Negative will increase further. You already have negative balance. You deposit some money, my negative balance will reduce. Are you able to understand? Yes, so this is how we deal with overdraft bank balances. Now, what I want you to do is sit and practice whatever we have discussed since yesterday till now again in your notebook now. And in our next class, we will start solving problems please bring the ICAI textbook to the classroom. Now sit and practice these entries, the note which I have given, the balances, the logic. If you know all these things properly, solving problems is a cakewalk. Okay, very very simple. Write down. Practice.